Welcome to the deep dive. We're all about plunging into complex topics and pulling out the insights you really need. Today, we're looking at something pretty exciting where cutting edge tech meets, well, real world money Bitcoin, specifically its next few weeks. Yeah, we've got this fascinating source document here. It's called An Advanced Deep Learning by AI Forecast, and it's dated today, July 10th, 2025. And it basically tries to map out Bitcoin's price movements for the next 30 days, so from right now until August 9th. So our goal today, let's unpack this thing, see what this AI analysis actually means for you. Maybe you're an investor, maybe you're just curious, or maybe you just want to get a handle on the crypto market forces. We want to find those key insights, those aha moments, figure out what you should really take away from this snapshot of a potential future. Okay, let's dive in. What's the big picture? What's this AI actually painting for Bitcoin over the next month or so?
Well, the executive summary gives a pretty clear starting point. Overall, it's looking at a slight upward trend for Bitcoin over these 30 days. It's projecting a start around $112,415 and landing somewhere near $113,993 by August 9th. And just so you know, these are daily closing prices, specifically at $7 a.m. GMT +7. That's Vietnam time.
Okay, slight upward trend. And the source mentions this is about, what, a 1.6% increase from where we are right now, around $111,490.
That's right. So like you said, not predicting a huge rocket launch or anything, more of a gentle, steady climb.
Got it. Gentle climb. But climbs usually have peaks and valleys, right? What about the extremes? Does the AI see any big highs or lows during this month?
Oh, absolutely. It's not just a smooth ramp up. The forecast sees Bitcoin potentially hitting a high of $114,712. It pins that around July 28th. And on the flip side, the lowest point it predicts is $112,983, expected around July 22nd. So yeah, definitely not flat. There's a journey there with some, notable bumps within that general upward path.
Okay, so a steady overall rise, but with some definite points to watch out for. What does the AI say is driving this main trend? And are there specific moments, maybe landmarks on this predicted journey we should really focus on?
Yeah, what's really interesting here is how it calls out specific dates and prices. Gives us these concrete moments we can actually watch play out potentially. The AI terms it a slight upward trend with moderately high confidence, and the strength is called moderate. Think gradual momentum, typical daily swings, maybe 1-2%. So yeah, not a crazy roller coaster, more like a deliberate hike. And it highlights several key dates, almost like checkpoints. So July 15th, for instance, might see a temporary dip there around $113,241. That's after some initial upward push. Could be a moment to reassess, right? Then you've got July 28th. That's the big one, the predicted peak for the period at $114,712. That's a key resistance level to watch.
Okay, so a dip, then a peak. What happens after the peak?
Well, after that high point, look towards August 3rd. It predicts another dip down to maybe $113,538. This could become like a new floor, a new support level as the energy shifts a bit. And then one more potential high point to watch, maybe another test of resistance, is August 6th, pegged at $114,181.
It really does sound like a roadmap. So what's the overall shape of this journey? Is it just a straight line upwards or more like steps?
It describes it as a gradual ascending pattern with small waves, almost like an ascending channel, like a river flowing uphill, but with these gentle ripples. It definitely includes some mid-period corrections, those dips we mentioned, but then followed by recovery later in the period.
And the energy behind it, the momentum.
Right. It expects strong momentum early on, and then again late in the 30 days, there's this acceleration phase predicted around July 27th to 28th, leading into that peak. But yeah, some weakening expected mid-period during those corrections.
Makes sense. What about the ride itself? Bumpy? Smooth? Where should we brace for maybe bigger swings?
Volatility. Okay, it's expected to be pretty stable overall, actually. But with a slight increase right in the middle of the period, the AI specifically flags two periods for higher volatility. First, July 22nd to July 30th. That covers both a correction and then that rapid increase phase into the peak. So expect a bit more chop in there.
Okay. Mid to late July. And the second period.
And then again from August 3rd to August 8th, that's during the recovery phase after that predicted low point around the 3rd. So another time things might be a bit more active. Overall, though, it cites the risk-to-reward ratio for the whole 30 days at 1 to 1.5, which is fairly healthy. Suggests the potential reward outweighs the perceived risk based on this model.
Okay, so we have what are the price points, the timing, the volatility, but what about the why? This AI isn't just guessing, right? It must be looking at underlying data. Let's dig into that. What on-chain metrics, what sentiment is actually shaping this forecast?
Exactly. And connecting it to the bigger picture, these on-chain metrics, they really paint a detailed picture of the network's health and activity. That's the foundation for these price predictions. It helps show us not just what might happen, but maybe why. So, for example, that overall 2.1% increase predicted, it lines up with a really, really high hash rate, 837.22 exahashes per second.
Whoa, 837 exahashes? That's enormous.
It is. It signifies massive computing power securing the Bitcoin network. Basically, it tells you network security is robust, miners are confident and invested. For you, the listener, this means the network's core integrity is incredibly strong, which is like fundamental for any price increase.
Okay, so the network itself is humming along, incredibly secure. What other data points support this gently optimistic forecast?
Well, remember that predicted low point, around $112,983. The AI correlates that with a tiny mempool size, just 2,264 transactions waiting. Think of the mempool like the waiting room for transactions. That small number means the waiting room is basically empty. Low congestion, transactions should be smooth, fast. That's good for stability, good for user experience.
Ah, okay. So easy to use, less frustrating.
Exactly. And then you have high Bitcoin dominance, 63.77%, meaning Bitcoin makes up almost 2/3 of the entire crypto market value. That suggests capital is really concentrating in Bitcoin, which could be part of what drives the momentum towards that predicted peak of $114,712.
So low congestion encourages activity, and the money's flowing into Bitcoin specifically. Does this show up in actual transaction numbers?
It does. High transaction volume, 540,433, combined with really low average fees, just $2.09. That reflects strong demand for using the network. People are actively using it, and it's cheap to do so. That confirms that underlying upward trend.
Okay, that makes sense. And what about the mining side beyond hash rate? Anything there?
Yeah, that price peak around $114,712 might also be influenced by a high difficulty level, 116.96 trillion. That's how hard miners have to work to find a new block. A number that high just points to fierce competition among miners. They're all fighting to add blocks, which, again, reinforces how secure and robust the network is.
And the overall market size, is it consistent with this picture?
Yep, the market cap is huge, over 2.216 trillion USD.
Yeah.
That definitely supports the forecast. But the AI does note a 2.44% 24-hour volatility figure, suggesting, you still need to keep an eye on sentiment. Sudden shifts can still happen.
Right. Always the caveat.
And finally, just one more point, that stable forecast toward the end of the period. It aligns with the block height reaching 904,885. That just shows steady, ongoing development of the blockchain itself. Healthy progress.
So, okay, the network sounds incredibly healthy. Active users, strong fundamentals underpinning everything. But you mentioned sentiment. How much does, human emotion factor into this AI's calculation? Can feelings override the data?
Oh, sentiment is absolutely critical. And the AI tries to factor it in. It suggests sentiment might shift, maybe from cautious to more optimistic, especially if the price breaks above $114,000. That could trigger some FOMO, fear of missing out later in the month.
Oh, the classic FOMO effect. What about different types of investors? Does it see institutions and retail acting differently?
It does. For institutional behavior, it expects the big players might be accumulating, buying dips around that $113,000 support level. They might use Bitcoin's high dominance to build long-term positions. Retail investors, on the other hand, might be more prone to selling during those correction points, maybe getting a bit spooked, but then buying back strongly during the recoveries, often influenced by social media buzz and news headlines.
So those human emotional waves can definitely amplify or, I guess, dampen the trends the data suggests.
Exactly. They're a key variable.
Okay, so this AI forecast isn't just predicting numbers, it's actually giving strategic advice for different kinds of investors based on its outlook. So what does it suggest you might do, depending on how you approach the market?
Right, it offers some tailored recommendations based on risk appetite, basically.
Mm-hmm.
For conservative investors, the advice is pretty straightforward. Hold existing long-term positions. Maybe consider adding more around that $113,000 support level. And think about taking some profits gradually if it hits $114,000. It also recommends using dollar-cost averaging DCA, investing a fixed amount regularly to smooth out the bumps. And definitely keep an eye on those on-chain metrics before adding more.
Okay, DCA and watching support resistance. Sounds sensible for a conservative approach. But, are there risks even there? What does the AI say about potential curveballs.
That's a really good point, because even with a conservative plan, you need to be aware of external factors. The AI's own limitations, which we should touch on, highlight that things like sudden regulatory changes or big macroeconomic shifts could still disrupt things, even for long-term holders.
Yeah.
But within the scenario it forecasts, yeah, those 113K support levels look pretty solid, according to the model.
Okay. What about someone with maybe a bit more risk tolerance, the moderate investor?
For moderate investors, it suggests a slightly more active approach. Maybe combining buying the dip, specifically calling out $113,241 with selling near resistance, like around $114,181. It also suggests allocating maybe 30 to 50% of capital to Bitcoin and diversifying the rest into altcoins. And crucially, using a stop loss. It mentions setting one at $112,983 to protect capital if things unexpectedly turn down.
Right, risk management becoming more explicit there. And then for the really active folks, the traders who like to ride those smaller waves we talked about.
Yeah, for active traders, the advice is to focus on swing trading around those key inflection points. Specifically, it mentions the move from the August 3rd low, $113,538, up towards the August 6th high, $114,181. It also suggests maybe using low leverage to capitalize on that expected mid-period volatility bump, and paying really close attention to trading volume that could signal breakouts, especially if Bitcoin tries to push past that $114,712 peak. High volume there could mean a stronger move.
Interesting. Does it give any super specific entry or exit points that might apply more broadly, maybe for shorter term plays?
It does offer a couple of specific tactical ideas. It points to buying around $113,000 as an optimal entry, suggesting a stop loss just below at $112,500 and aiming for a target of $114,000. It also floats the idea of short selling, betting on the price going down if reversal signs appear around that $114,712 peak, but with a very tight stop loss just above at $115,000 to limit risk if it keeps going up.
Okay, so very defined risk parameters there.
Yeah, just a general guideline it mentions. Maybe don't allocate more than 20% of your capital to any single position, and adjust that based on the current volatility and what those on-chain signals like hash rate are telling you.
Of course, we have to remember no forecast is ever a crystal ball, right? No matter how smart the AI. This document even includes its own reliability score and lists limitations. What should we keep in mind when we're looking at these predictions?
That's such an important point. While this AI provides incredible insights, understanding its limits, understanding the external forces it can't fully predict, is crucial. So the forecast itself gives a reliability breakdown. For the short term, like the next few days, it claims high reliability 80%. And that's largely because the initial momentum it sees aligns well with the current observable on-chain data. It's building on what's happening right now.
Okay, so the closer we are to today, the more confident it feels based on current facts.
Pretty much, yeah. But then for the midterm, say a couple of weeks out, the reliability drops to moderate 60%. And that's mainly because those potential correction points introduce more uncertainty, more variables.
Makes sense. More time for things to change. And longer term within the 30 days.
For the longer term view within this window, it goes back up slightly to moderately high 70%. It sees that overall upward trend holding, but, and this is key, it explicitly states this depends heavily on broader macroeconomic factors.
Right, the big picture stuff. And those macro factors, they can be total wildcards, can't they? What are the specific limitations the AI itself flags? What blind spots does it admit to?
It lists three really crucial limitations we need to be aware of. First, global crypto regulations, sudden changes, new rules from governments.
Yep.
These can massively swing the market in ways an AI might struggle to predict ahead of time. You can't easily model a surprise announcement.
Yeah, regulation is always a big unknown. What else?
Second, sudden, unpredictable shifts in market sentiment, or even those on-chain metrics. Think about a major unexpected news event, maybe a security issue somewhere unrelated, or just a sudden shift in public mood. That can cause emotional cascades that throw off purely data-driven forecasts.
Okay, the human element again. And the third?
And the third is those broader macroeconomic influences we mentioned. Big decisions like, say, from the U.S. Federal Reserve on interest rates or major global economic news. These are powerful external forces that can shift the entire financial landscape, including crypto, often in ways that go beyond the AI's immediate data inputs. So yeah, it's a powerful predictive tool, this AI, but it's definitely not an infallible crystal ball that operates within boundaries.
Okay, so let's wrap up this deep dive into the AI's forecast for Bitcoin's next 30 days. What we've seen is a picture of moderate optimism, wouldn't you say?
I think that's fair. A slight upward trend overall.
Yeah, marked by some very specific key price points to watch, underpinned by what sounds like really strong network health fundamentals.
Robust network, active use.
And it even offers clear strategic ideas tailored for different investor types, which is pretty useful.
Definitely gives you things to think about, tailored to your own approach.
So this AI gives us this really fascinating window into a potential future, right? Grounded in tons of data, complex modeling of market dynamics. But it leaves me with a final thought, maybe something for you, the listener, to mull over. As these AI forecasts get more and more sophisticated and maybe more widely known, how might the very existence of these predictions, once they're out there, start to influence us, influence human behavior? And could that, in turn, actually change the market itself? It's kind of a feedback loop idea, isn't it? Something interesting to consider.